QuickBooks Pro Plus Desktop 2022 OneNote presentation, short-term investment, sales, and gains. Let's get into it. We're into it. QuickBooks Pro Plus Desktop 2022. Here we are in OneNote. If you have access to OneNote, would like to follow along, icon left-hand side, topic introductions, 8040, short-term investment, sales, and gains tab. Also take a look at the immersive reader tool, topic introductions in the text area too. Same name, same number, but with transcripts. Transcripts that can be translated into multiple languages and either listened to or read in them. Same name and number as presentations as well. Topic introductions designed to give an introduction to the topic, provide screenshots, links where applicable, give accounting background to complement the presentations, and can be used to follow along with them if you don't have access to the software at that time. Closing the icon on the left-hand side, we're looking at the screenshot of the home page to start out with. We're going to the trial balance. We're going to be looking at the short-term investments, imagining that we're selling the short-term investments. Now note, with regards to short-term investments, if you have a business type of account and you're not in the business of investing in stocks and bonds, but you do something else, like for example, us selling guitars, you might not have as much in the way of short-term investments, because if you have excess money in the business, it's there in order to use it, in order to generate revenue, make investments. If it has excess money and it's not going to be used in the business, then oftentimes you might give it to the owners in the form of draws so that they can then take that money and put it into investments on their own. However, you could have a situation where you want that money in the business that you're going to use in the future to hold on to it in some other location that might be giving you a return, such as the investments in stocks and bonds. That's what we're imagining to do here. If you're using QuickBooks for a private type of source, or possibly a business that has the business objective is investments, then of course you might have multiple kind of short-term investments. You might be investing and have investments in different sorts of financial institutions and investing in different types of financial assets like the stocks and the bonds. A couple things to be aware of then. One is that QuickBooks is not typically going to be used in order to track the day-to-day activity. It's more likely going to be used for financial reporting, giving a static look at where you stand at a particular point in time. So you might then update your QuickBooks account periodically with your financial statements, possibly on a monthly basis, and use some other kind of software, or possibly the brokerage account itself to see the detail that's going to be happening on more of a routine day-to-day type of basis. Also note that you probably don't want to have too much detail in your account with the QuickBooks accounts in terms of the different types of investments that you have. You probably want to summarize them possibly by financial institution, or possibly by the type of investment. If it was a personal investment, possibly you want the short-term investments that are outside of like a retirement plan, like a 401k or IRA, and then long-term investments that are inside of an IRA, which are a bit more restricted. That's another way that you might be breaking them out. The other problem that you have is, how am I going to record the increases or decreases periodically if I have not yet realized them? Because, for example, we're going to imagine here that it goes up. Let's say that it went up, our investment went up, but we didn't sell it. That means that we'd have to increase our account here, short-term investments, and the other side would have to go somewhere. Typically, we would think revenue would be the natural place for it to go, but we didn't actually realize it, and the stock market could go down tomorrow. So there's different theories in terms of, and we won't get into a lot of detail, but just note there's different theories on what you should do with that unrealized gains and losses, because you're thinking, I would like to have my assets reported at the current market value because the stocks are actually trading and I can do that, but I don't know where to put the other side. So typically we might put it into like unearned revenue on the income statement, possibly as an other income. That's what we'll do here. You can also create another account on the balance sheet in the equity section, which would be unearned revenue, so it wouldn't hit the income statement. Those are two of your main kind of options. Here, however, we're going to imagine that we sell it and have actually realized the gain because we're selling it and we're getting the cash for it, and it will have gone up. That's going to be our assumption. Here's the information. Here's a look at the balance sheet. So same kind of look at the balance sheet. We're looking at the short-term investment. I'm going to go to the checking account and record this in the register. So we're going to the register. It's going to say, we're going to imagine it's a Vanguard here. We got a deposit. We're imagining that we're selling it for $12,250. So there's going to be an increase, a deposit of that amount. Notice I'm not using a deposit form because I would typically use a deposit form when there's a connection to the undeposited funds from a sales receipt form or a receipt payment form. If not, I'll typically use the register personally because I think it's a little bit faster. Then I'm splitting down here so I can have two accounts down below. And we're going to have the short-term investment, which is going to go off the books at the $12,000, bringing it to zero. And then the gains on the sale, I'm putting into the income account, but I'm setting it up as other income because it's not part of our normal operations. So if I then go to the balance sheet, the checking account would be impacted. It would go up. The asset account is going to go away because now we've basically got the money from it, so we don't have the investment anymore. And then on the expense side of things, notice the income is not up top in the income line item. I put it down below in the gains on the sale of investment. That's because this is not how we typically make money. And so I don't want it to show it as part of my normal ordinary income. If I make projections into the future, I don't want to make that as part of my projection. I want to say this is my business, normal business activity income. And this is my other kind of gains that I got over and above that. So if we saw this with journal entries, it would look something like this. We're going to say, okay, so we had this on the books for the $12,000. We're going to debit the checking account for the $12,250, the amount that we sold it for. We're going to credit the short-term investments by the $12,000, and the gains are going to be the $250 on the income statement. So once again, we got our February numbers, our year-to-date numbers. Checking accounts going up by the $12,250, impacting both the current month and year-to-date in the same way because it's a balance sheet account. Short-term investments going down by the $12,000, bringing it down to zero in both the year-to-date and the current month because it's a balance sheet account. And then down below, we've got the $250 gains, which is going to be an increase because it's a credit, so it's going to be income. If I look at the current month, we only had the interest expense before, so we had a loss. Now we got the $250 income, so now we still got a loss of the $346. We had the $6,831 net income on the year-to-date numbers. We increased it by the $250 here, bringing it up to the $7,081. Checking account then on the general ledger was at the $86.94, goes up by the $12,250 to the $98,344, and the short-term investment was at $12,000, goes down by $12,020. The gain on the sales is going up by $250 to $250.